Hello everybody, welcome to another update on the Gold Forecaster Index. Um, the Gold Forecaster Index is really my crystal ball. It is 100% accurate and it predicts everything. It predicts the gold price precisely where it should go. And in my last video, as you probably know, I told everyone not to accumulate gold at this point here. I also called it the bottom here to buy here. So I got buy signal here and I told everyone not to buy gold here. And that's exactly what is happening. We had a correction. It went a bit up, but it fell back down. So we have no gains here in gold at all. So what does the crystal ball tell us today for the coming month? Let's look at the gold forecast index. And it says that it will be going down. So the leading indicators for gold are now pointing downwards. It's still in the positive here. So gold has a positive momentum in it, but the power is still decreasing. And it could be that in the coming months it will decrease to zero, and then we have a problem. That means that gold will not be going up anymore. So I expect that weakness in gold will continue. But of course, it also depends on what events there are, political events, the coronavirus scare, which I will talk about later on. So yes, let's go over some data now. Leading indicators are pointing upwards. So the blue line is here going up. It is clearly going up. Even the OECD indicators are going up. So we are not going into a recession. So I repeat, we are not in a recession yet. You can see here the bottoming out of the OECD indicators. Also, the SAM rule recession indicator is not pointing into a recession now. So stocks are still the way to go because we're in a growth phase. Let's look a bit here. This is the yield curve. Well, we saw a bit of an inversion here since the beginning of the year. We started to invert again, and that means that we probably will see the Federal Reserve, cut rates again this year if this keeps going lower. And if you look at the leading indicator 3 minus 2-year Treasury, you see that the blue line here is also going down. So there's a risk that we will get an inverted yield curve. And then they will cut rates to revert it back up. So that's something that we need to watch. Also interesting is to know that the 2-year yield has now gone down here lately since January. It went down to 1.36, and that's well below the Fed funds rate, which is at 1.55 here. So a rate cut is very possible in the coming months. You can also look at the treasury yields here. So you see a clustering here and then it drops. The same is happening here in 2008, clustering and then a drop, clustering and drop. So we are headed to something like a recession, but we're not there yet when we look at the leading indicators. The money supply. Yeah, as you know, the Federal Reserve is still printing money, doing the repo operations, buying treasuries. The same with China. Japan and also the ECB, so the whole world is printing money. And you can see that from the monetary base here, we are starting to move higher, which is good for gold in the long term. All the other money supply indicators are also continuing to go up. Maybe a bit less for the M1 supply, but it will probably also move up. The balance sheets here. We got new data from the ECB. Apparently, the balance sheet of the ECB is not going up, it is very flat here. So we will see how that evolves. This is actually data from January, and they are not increasing their balance sheet. Japan has printed a bit, but it's pretty flat as well. And also here the Fed, you can see here that it's also very flat here. So probably if some of the repo is going to be paid back here, which explains why this is flat. Let's take a look at these repos. The latest data shows a decrease in repurchase agreements. So a lot of these repos are getting paid back. Let's take a look at more detail here. So we saw here a decrease in repurchases, purchase agreements here, but it is picking up again. And the latest data shows a huge increase here. Overnight is going up, and also the term repos are stable here at this level. So still ongoing. It's not going to stop. It's going to keep going on till at least April now. Let's take a look at the credit spreads. You see that the 10-year has actually crashed here, the green line, while the AAA bonds are not crashing that much. So we have a widening credit spread, which is also seen here. And that means that GDP will be lower, maybe by 0.1% lower. We will see how that evolves, but I don't expect GDP to have blowout numbers, so it will probably be weak. We also got the trade deficit numbers. We saw a small increase in the trade deficit here from November to December, but it's very small. So overall, we are still in an uptrend now. So the deficit is shrinking. So that's good for the dollar. On the other hand, the budget deficit, which is this orange line, is still going down. So budget deficits are going higher, while the trade deficit is shrinking a bit. Let's look at the producer prices. We saw here an uptick last month, and this uptick is continuing here. Trend is higher for the inflation rate. So that's a good indicator for the higher gold prices. Capacity utilization went down from 77.3 to 77, not a huge decline. So this is probably flat here. Inflation will go a bit higher, but you can see here that I think the inflation rate will be stable going forward. So let's look at some blog posts now. We saw a decline in open interest in the COMEX stock report, COT report. And that also always means that that gold is going to go higher when this happens. When open interest goes down, it typically starts a move higher. So we are now beginning to see a decline in open interest. Still needs to go way down here to this level, and then maybe we can see a rally in gold. But we are currently still here, still moving lower in open interest until we come to the point that gold will go higher. So I would not accumulate gold yet at this point. Next post. Very good video of Mr. Gammon here. You can watch that. We had a crash in the Chicago PMI to 42.9, so that's some indicator that not all is well, but maybe this is just a small aberration from the other indicators. There's also a gold demand report out. You can see here that gold demand is still not going higher, not a lot of interest in gold, but also supply is going down a little bit. Not much, but it is going down. And I have also found some numbers on what the budget deficit is going to be in a few years. As you can see here, the deficit numbers, which is this line here, they are going to explode in the coming years above 1 trillion. Then it goes to 1.5 trillion and yeah, higher and higher. So that will not change here. Deficits will be going higher. Some numbers on the freight rates and air cargo rates. This trend is going down. So GDP is not going to be very high in the coming months. And this is a new correlation here between oil and CCC bonds, because we know that energy is very correlated to the CCC bonds. We have 13% of those junk bonds which are energy bonds. So there is some sort of correlation between this CCC bond yield and crude oil prices. So if crude oil prices go down, then the bond yields will go higher. And that is what we can see here between the yellow line and the blue line. Let's go to the FOMC meeting. There was a FOMC meeting on 29th January. And what's very important to know here is that there was an extension of repo to April. That's some new news. So we will get more money printing, more money supply increase, which is good for gold. And yeah, he also said many people benefit from low interest rates. That's exactly what he said. So we will know that when he says this, that means that he will cut rates. So we can be pretty sure that we will have a rate cut in the next FOMC meeting. He also said that 1.5 trillion in excess reserves wasn't enough. Okay, he wanted to go above that. And what does that mean? That means he wanted ample reserves above 1.5 trillion, and that means that he will expand the balance sheet even more. So he will keep increasing the balance sheet and cutting rates, and that's of course good for gold and stocks. This is also a very important report. Rabobank says that there will be rate cuts. Look at this. We are going into 2020 and the rates will go from 1.5, 1.2, 1, and eventually 0 at the end of 2020. So that's something to keep in mind, that the Fed will cut rates to 0. Some picture on where we are on Apple. So Apple has a PE of 26, which is pretty high. So yeah, will you buy Apple at this PE ratio, or will you go into some undervalued assets? So I would not recommend to buy Apple here. Some post about the difference between the PCE and the CPI. Basically, it's just the same, but there are some differences in it. Some of them is a broader measure than the other. Okay, let's look at this one. This is the Ray Dalio portfolio apparently, and he is now in bonds apparently, and less in stocks and less in commodities. So he's actually in bonds, so he's expecting an inversion in the yield curve. That's what he's expecting. He's expecting the bond yields go down. And I agree with him. We see that the yield curve is starting to invert again. Now let's talk about this coronavirus. There's a lot to talk about this virus. Now let's look at the economic numbers. What does this virus actually do? It shuts down the Chinese manufacturing, also the airlines. It's also shutting down the oil demand in China. Apparently, there's a 20% decrease in demand there. And what does this do? We see that yields are falling because there's slower growth. Also, the copper price was crashing here, indicating that they will have less copper demand, less oil demand. Inversion of the yield curve happened. So, yeah, Asia is the largest consumer of oil. So, this will have a huge effect on oil. And we saw that the oil price went down to $50 per barrel. Now, I think they will try to keep the oil price above $50. So what OPEC is doing now is they are trying to cut the supply. So this demand curve is going to the left, price is going down, but OPEC is going to cut production and will prop up the price again and keep it probably at the $50 level now. So that's the status on this coronavirus. Apparently they found a cure, so we could reverse if all those people get cured again, then China can open up again and everything is resolved. But I don't think that that this will happen very fast. So there will be a lag time, probably a quarter or two that we have less GDP, and then we can go back to growing again. So this will have impact on the GDP and oil consumption. Okay, let's go to this one. Oh, this was the power consumption number of China. And you see that it's going down. Eh? China is not doing well. It's absolutely not doing well. Chinese power consumption growth is going down. With the coronavirus, this will be going down even more. And I'm very important to know. I'm very interested in the January numbers, which will be coming out soon. I think it will plunge even more here. So Chinese GDP will be very bad. Let's look at this. This is a chart of the palladium stock at the warehouses. You can see that that stock level is very low. It went even lower here. So there is not a lot of supply in palladium. That's why the price is going up. Also in platinum, you can see that it's starting to go down, but still in uptrend. But when there's no palladium left, the automakers will need to go to platinum eventually. So this will also go down at some point. Oh yeah, Peter Schiff has lost his bitcoins. So you can see the explanation here. This is a stock that I advised to buy. That's Sofina. You can watch it here on this video. It's a very good stock to buy. Some numbers on the US mint sales, which are going down. So not a lot of Americans are actually buying silver and gold. So we need to see a reversal here before gold and silver will pick up in price. The PSLV premiums are actually going up, so that's a good sign for silver. This is a graph that I found on non-performing loans in China, and apparently the rural banks are in the biggest problems here, and the state-owned banks are the most safe here. So if you want to buy Chinese banks, I don't know, then you should take the state-owned banks first, because these rural banks are the riskiest. Yeah, also here, Chinese New Year is already done, so that means that Chinese gold demand will be going down now. So not a good period to be buying gold at this moment because the Chinese are out of the market now. A new chart that I created here with the cash freight index. You can see here that the freight index is going down, which means GDP will be anemic. We will see how this evolves, but I don't think this will be going higher soon. You can also see that the Baltic Dry Index is really crashing here. These are not good signs for higher GDP. Yeah, I also don't think that the China trade deal will be much of a deal here. I think they will be buying more from Brazil than from the US. You can see here the amount that they buy are mostly Brazilian agriculture instead of the small US agriculture that they buy here. So China says that they will do the deal, but I don't think they will actually do it. And on 15 January, we saw an extension of repo to mid-February, but now it's already extended to April. So they keep extending and extending, and it will never end. These are the palladium lease rates going higher on supply shortage. And on 14 January we had Trump here, and it said that the tariffs would stay in place until the end of this year. So that's good for gold, of course, because tariffs are always good for gold, as you can see here, and bad for oil. Oil goes down if there are tariffs. Dollar will go down if there are tariffs, and bond yields go down. So this is good for the gold miners and the gold stackers. Next post is about loan growth. We are seeing, we are not seeing loan growth picking up here. So commercial loans going down, and also the loans and leases in bank credit are starting to go down. But on the other hand, deposits keep increasing. So there's a gap here. And typically when we see such a gap, when loans aren't going up, but deposits are, then we have a recession. Same here, we have a recession. And if this flips over again, then we have a recession here. Wage growth is slowing. We also had the bad non-farm payrolls of 145,000. We will get the new numbers this week. I don't expect that this will be very good, but maybe there is a surprise. Also this here, we see this huge discrepancy between the silver inventory and the silver price. So at the SHFE warehouses, we have the Chinese stacking up silver, but we are not seeing this in the silver price yet, but that will come. Still waiting for the new data because we had a Chinese New Year, so the data is delayed now. Also with the virus, we are not getting the data at this time. Yeah, this is just a post on Russian oil price. So apparently the Russian oil price is higher than the WTI price and Brent. So the Russians get a better deal. So that's why the Russian oil companies are moving up. And we're done here. This is the last video. So what is the conclusion here? The conclusion is that economy is still doing well. We are not in a recession yet, but there are signs that it is getting worse. Gold is still in an uptrend. We're still having a gold forecaster index that's positive. So gold could go higher, but the power of the strength of the up move is actually diminishing. And if this goes back to zero, then look out below. So I would go into value stocks at this moment, like Sofina. That's the stock that I recommended. You can also go into REITs where you get a good dividend of 5-6%, or in Russian oil stocks where you also get 6%. But I would not be accumulating gold at this time because this trend is still going down, and I don't know if this will go to the 0% level here. So that is my recommendation, and I'll see you in the next video.